Last month, we warned you guys that BlackRock's Bitcoin ETF could potentially be an attack on Bitcoin. And I believe that two data points have emerged in the past week that proves that we are not only hurtling towards an attack, but it is actually accelerating. And both of these events have just kind of conveniently been swept under the rug by the recent news of the SEC deciding to delay their decision on 6 Bitcoin ETF filings. So let's start with the first event that I believe has happened in the past week. And that is the fact that BlackRock has just quietly become the largest shareholder for 4 out of the 5 biggest Bitcoin mining companies in the world. So we're going to take a little bit of a peruse on this tweet thread by the Bitcoin therapist. He shows this cute little chart and it has the 5 largest Bitcoin miners in the world. And we can see what kind of position BlackRock holds in their equity shareholders. So we're going to go through each of these Bitcoin miners one by one to kind of illustrate this point really well. So let's begin off with Riot Blockchain, the $1.92 billion giant, which of course is one of the largest Bitcoin miners in the world. We can see that BlackRock holds significant exposure to the 4 largest equity shareholders of Riot Blockchain, and they themselves hold a 6.44% direct exposure to the company. Now, the second Bitcoin miner on the list is Marathon Digital Holdings, okay? Most people will remember Marathon Digital because they are the company that infamously came out in 2021, and they said that they were actually going to start mining OFAC compliant blocks. More on that later because that does relate to the second event that I believe has happened in the past couple of weeks that proves that Bitcoin mining is potentially under attack from BlackRock. But let's talk about Marathon, okay? BlackRock has significant exposure to the 3 largest shareholders of Marathon Digital Holdings, and they themselves hold a 6.44% holding. So Cypher Mining is the third one on the list. BlackRock only has a 0.88% direct exposure to Cypher Mining. But again, they do have significant exposure to the 3 largest shareholders of Cypher Mining. Let's move on to number 4 on the list. Of course, we're talking about Hut 8 Mining. They're a $500 million Bitcoin miner, and they are the one company that BlackRock does not have significant exposure to in the top 5. So let's move on to number 5 on our list. That is actually TeraWulf Mining, and let's look very closely at this one here. We can see that despite BlackRock only having a small 2.28% stake in this company, they do again have significant exposure to the 2 other largest shareholders in this Bitcoin mining company. So where is the attack on this? Why is this vulnerable? Why is this risky? Let's start talking about the second event that kind of popped into the news headlines this week before getting buried by the SEC ETF decision. So the second event that got conveniently swept under the rug this week by the big SEC news, which we're going to talk about later, is the fact that over half of the Bitcoin mining hash rate is now KYC'd. So what exactly does that mean? Okay, firstly, KYC stands for Know Your Customer, and that means that miners who are mining from these 2 specific mining pools have to give up their identity, okay? The mining pool has to know their customer. So let's have a look here. The 2 largest mining pools in the world are Ant Pool and Foundry, okay? Foundry is the American-based Bitcoin mining pool, and we can see that they control 33% of the global Bitcoin hash rate, and they are, once again, KYC compliant. So that means all of the miners who connect to this mining pool have to give up their KYC data. And the same is true for the Bitcoin miners who connect to the mining pool called Ant Pool, okay? This Bitcoin mining pool is actually found in China. And yes, that is the same China that actually banned Bitcoin mining back in 2021, and that is the same China who came out this week and actually announced that Bitcoin is now legalized in the country. If you guys want a video on that one, let me know in the comments down below, because I am thinking about doing a video on China's Bitcoin backflip. But all I want to point out is the fact that Ampool controls 17% of the global hash, they're KYC'd. Foundry controls 33% of the Bitcoin global hash. They are KYC'd. So that means more than 51% of the Bitcoin mining hash rate is actually KYC'd. So why is everybody making such a big deal about that? Well, some people claim that if these 2 mining pools actually kind of get tapped on the shoulder by governments, that they could start censoring transactions, and they might even try a 51% attack on Bitcoin. So before we get a little bit conspiratorial, let's actually explain the risks here. Is Bitcoin at risk from a 51% attack? Well, firstly, just because somebody would ever hypothetically get 51% of the hash rate and they would start actually trying to attack the Bitcoin network, that doesn't mean they would be able to actually sustain that attack for a sustained period of time. If you do want to learn a little bit more about 51% attacks, I would highly recommend you check out the video that Andreas Antonopoulos has done on a 51% attack. You can find that one right there. He is a technical expert and I am not. So again, full disclaimer there. But the second reason that this potentially might not even work and might not actually destroy the Bitcoin network is the fact that just because a miner is in a mining pool like Ant Pool or Foundry, it doesn't mean they can't switch, okay? Just because Foundry is a United States-based mining pool, it doesn't actually mean that 33% of the global hash found in Foundry is actually all within the United States. I don't believe that is how it works. So under a hypothetical scenario where Foundry actually cooperated with the Chinese mining pool called Ant Pool, they were both kind of attacking the Bitcoin network. Just because the miners are using Foundry doesn't mean they can just simply switch to another mining pool that is not acting in an adversarial environment, okay? Just because a miner is using Ant Pool or it is using Foundry doesn't mean they have to use it indefinitely. As soon as these mining pools start playing funny business, miners can just simply switch and start pointing their hash rate to a different mining pool. It really is as simple as that. And now another reason that this 51% attack will actually fail is the fact that how are you going to get the United States to actually agree with China? The two countries hate each other, okay? There's no way you're going to get those two mining pools to actually cooperate. So they are kind of the reasons for why I don't believe this is a serious attack. Yes, it is something we should be paying attention to. The fact that 51% of the global hash rate is KYC'd, it's not a good thing, okay? I would love to see Bitcoin mining decentralize a little bit more and maybe anonymize a little bit more, but that's a separate point, okay? Bitcoin mining is still decentralized enough despite what many altcoiners will try to claim. Most of these altcoiners just simply have not ran the numbers or done the work behind why a 51% attack on Bitcoin is simply not sustainable. And that is the reason why most nation states that probably haven't attacked Bitcoin yet, okay? If you tried to attack Bitcoin and if that attack failed, guess what you've just done? You've just shown how strong and resilient the Bitcoin network is. And that is why we see Bitcoin adoption actually increase in all of these countries around the world that try to attack or ban Bitcoin. Think about Venezuela, Argentina, or even Nigeria more recently, the country who tried to roll out a CBDC and the people just said, yeah, you know what? We're going to adopt Bitcoin. We're not going to download your CBDC e-Naira. That actually only has 0.35% adoption, I believe, at the time of recording. So I'm not too concerned about a 51% attack, but I'm far, far, far more interested about the timing of Gary Gensler's recent announcement. So I believe he came out and he said, look, we're not actually going to make any decisions on these 6 Bitcoin spot ETFs for another 45 days. Now, the reason for why I think this is really interesting is let's take a look at the timetable of this little Bitcoin ETF decision template. That's what we're going to call it today. But I want to point your attention towards October. So some people have speculated about the fact that if the SEC is going to actually approve this BlackRock ETF, BlackRock wants to be number one. They want to be the first one approved. That's why it's very, very, very interesting that Gary Gensler said, look, we're going to wait 45 days before we make any decisions, because we can see on this list of ETFs here, if the SEC actually waited for the final deadline to make their decision on a Bitcoin spot ETF, they would actually have to make a decision on the 21 shares ARK Bitcoin spot ETF before the BlackRock one. So naturally, if BlackRock is kind of in cahoots with the SEC, like many people are speculating they are, this would be interesting because BlackRock would not be the first Bitcoin spot ETF approved, okay? Most people do think that the SEC is going to wait until this final deadline that is actually going to happen in 2024. But I'm just laying a case out there and saying, hey, look, what if BlackRock is going to actually be the first Bitcoin ETF approved? Why did the SEC say 45 days? Why did they say October? And if a decision is postponed until October, guess which Bitcoin ETF is going to have the first decision made on it? Well, surprise, surprise, it is actually BlackRock. Again, I just think it's a very interesting data point we should probably be paying attention to. Most people believe that the first Bitcoin spot ETF won't be approved until 2024, until we do reach these final deadlines in the Bitcoin spot ETFs. But again, you know what they say, typically the markets like to punish the most popular opinion. That's the consensus opinion right now. We won't see a Bitcoin spot ETF for at least, you know, the first quarter until 2024. I don't know. I'm just laying out this case. I saw an interesting tweet about it on Twitter this week, and I thought, hey, that is pretty interesting. So you guys let me know in the comments down below whether you do think that we could see a Bitcoin spot ETF before most people believe it to happen. And do you guys think that BlackRock is going to get that first Bitcoin spot ETF? I don't know. Let me know in the comments down below. All we know for sure is that coins are being absolutely drained off exchanges right now in preparation for this Bitcoin spot ETF. Ignore the recent price dips. I know a lot of people are very bearish right now because Bitcoin's dipped 20%, but they're not looking at the big picture. We've seen 1 million coins evaporate off exchanges in the past 3 years alone, and I think this is the signal we should be paying attention to. I think we should be watching what BlackRock is saying behind closed doors. Most of you guys might already know about BlackRock's secret Bitcoin report that they did publish in 2022, where they said the optimal allocation to Bitcoin was 85%, okay? They said only put 15% of your money in stocks and bonds. They're the trashy assets. You should have an 85% allocation to Bitcoin. If you did miss that news headline, we did record a video on it. You can bring yourself up to date by clicking on the link to that video right there. But if you want to learn a little bit more about how BlackRock's Bitcoin ETF could potentially be an attack on Bitcoin and all of the very interesting connections that BlackRock does have to the World Economic Forum and the Club of Rome, I'm going to recommend you do check out the video that we also recorded on that topic. I'll pop a link to that one right there. And with all that said, I hope you guys enjoyed this one. Let me know in the comments down below if you think I'm wrong or over the target. And I hope you guys love the 2 videos I've slapped up on screen right now. I will see you all in the next one.